Good to see you for another Friday chart clinic that we have here. This is for 1st of June. We are doing this on a very regular basis. We're getting good response, and one of the things also we want to provide some sort of a feedback and benefit to our Traders Truth Review members, which now we have close to about 2,000 subscribers in there, and it is growing thanks to your support. And do tell your friends and colleagues that the service, the Friday webinar, which is a short, about 20 minutes max, about 30 minutes, that this session that we do would benefit you, and in the way we hope you able to participate more of the activities that we're doing. One of the things that we are doing now is the so-called be a premium member and do a bit of charity for the National Kidney Foundation of Malaysia. What we are saying now, effectively 1st of May, right? Bill would will top up whatever of your fee to be donated to National Kidney Foundation. What merely saying is, if we will collect a premium subscription from each for the monthly, and we will donate 10 ringgit of your fee to the National Kidney Foundation. In return, Bill and myself will match 5 ringgit. So all in all, for each premium subscriber, we have about 5. This month we have a good turn up. People sign up or premium subscriber. I wish to thank you for your contribution, and as well as helping a bit for the unfortunate, especially the dialysis patient. You can read all about it under my latest. Okay, without further ado, I want to talk a bit about. I'm still waiting for one chap to come in. Is Steve here? All right, Steve sent me a very good questions. I was going to touch on about. Hi, Kathy. Good to see you again. How's everything? Okay. Steve is not here yet, so I'll just wait for it. I'll touch on about Steve's question that he has, right? But what I want to talk about for start, before going to the stocks profile, is talk a bit about Peter Kandel. Okay, now Peter Kandel, as most of you know, on the June 2012 stock market comment report, I did write a bit about him on his value investing. Now, most of you would know that Bill and myself are fund manager, and we are managing private funds as well as EPF funds. So what we do is we actually allocate certain parts of the stocks for our client, not so much in trading, but more in managing in for their retirement, as well as growing their wealth. In here, we're looking to build wealth, income aside. We have done really consistently over the last 8 years, average about 12 to 14%. Even over the last 2008, when we have a sell-off, we did quite well, only losing about mere 2% for some clients, some about 8% drawn down. Ever since we down, and this is not because of what we do, it's because of the methods that we use. One of them is actually a value fund manager. In here is Peter Kandel. This is a picture of him, you would see in here, and this really good book that he has, Something to Do. Now, you can get this book from the bookstore, or you can get it in Kinokuniya, or save yourself money. Okay, if you want to save yourself money, you can just go down and perhaps I'll talk about these things are broken up. The core of the essential stock picking from Peter Kandel is merely this, looking to buy things that is about 60 cents of a dollar. I think this is not new for some of you, perhaps for the new beginner investor. This would be something new, but for the older one, I'm sure buying 60 cents or paying 60 cents for a ringgit is something that you want, because like it or not, even Charlie Munger, which is a partner of Warren Buffett, has talked about the minimum margin of safety, as well as another value investor called Seth Carman also talks about the paying at least you're getting a 30% margin of safety, which means the market must be undervalued by 30%. But Peter Kandel looking for 40%, so paying only 60 cents per dollar. Does what I did speaking make sense? Right? Just like to know if you're following this so far. Can you just type yes or no? I'd like to know that, please. Just want to make sure you all are paying attention. Okay. Okay, are you paying attention? Yeah, makes sense. Okay, good. Right. So you make sure you're really understanding it. Are you? Yep. Okay, good. So you're getting response. All right, good. So this is important when it comes to value investing. Now, on top of that, we also teach the technical side, volume spread analysis, and we are doing a workshop the coming Monday and Tuesday, June 4th and 5th. Mr. E, who previously have attended, and many of you are listening today have attended our foundation course. You can re-attend back our course on Monday, free of charge. And those of you who are considered coming, we still have a couple of seats available on Monday, this coming Monday, June 4th to 5th. Let me know if you're coming and would like to see you know, and also like to spread our methods of investing. Okay. Now, what he merely says that his stock strategies we're looking at is the 666, you know, like the omen, 666. Look for stocks at a P of 6, paying 6% dividend yield, and getting the shares at 60% of the book value. Now, I won't talk about equity trackers. Now, equity tracker I do have in here. If you know about equity, I have under the video. That's under for members. I did have a fundamental stock tracker for those who from the fund. But this is how I demonstrate using the fundamental stock tracker in here, which is from equity tracker. You can go to the website equity tracker. This is where we actually picks the stocks from the fundamental, picking it from the fundamental indicator to actually look at how we do with it and to pair it with technical analysis. In this case, we use volume spread analysis. For you who don't know what is volume spread analysis, this is something that we've been talking a lot about volume spread analysis in our website. We would go into some example later in the talk here about how to use volume spread analysis to pick up stock. But this is a fundamental. Let's go back. Okay. So in here you can read all about it. So what I did was I ran this 666. P of 6, dividend of 6, and getting shares at 60%. These are the whole list of stocks that I have. You can see on the site in here, and they are quite reasonable in here. ECS, that's the one we were talking initially. I actually paid a visit to the management in here and got to know Mr. Fu very well about the outlook for the second half of the year. It looks very promising. Now they do already paid a dividend this week, 29th of June, at 8-cent dividend, which gives about 5% premium yield here, and I kind of like it too. All right, so another one in here. Let's go down in here. Another one I do believe of Tasco, which is one of our core shares that we have. We bought it somewhere around $1.30, and we're still holding it now. It's around $2.12, as you can see here. Still doing very well, so we're still pushing along with it. The Tasco shares in here. And now, what I want to talk about is very important. Is once you have this list of fundamental share, how do you pair it? Okay, how do you pair it with the technical analysis? And this is something that we do quite a lot. It's actually use the TAWA, and something we would teach in our main course. Let me just bring this down a bit here, if I can bring my screen. Okay. Let me just bring the screen here again. Let's shrink it. It's my meta stock. Something that we teach in our foundation course using the foundation TAWA. Okay, let me just run you and show you how I do this. I have a foundation TAWA, right? And this is a filter that we will give you in our main course, and we just run explore. Okay, so what it does is we will run the 1688 shares in here to make sure it actually corresponds to the fundamental stock. Now, very simple. What we're saying that if any of the stocks that appeared in my list here from a technical as well correspond to the fundamental, then we have both indicator tick, and that's what we're looking for. Okay, someone just raised a hand. I just want to see what was his questions. Mr. E here. Okay, not raised. Any questions so far, people? Okay. All right. No questions so far. Okay, Bobby have a. Oh, good to see you, Bobby. Do you have a question, Bobby? You raise your hand. Send me your question, Bobby. Okay. Okay. What was your question, Bobby? Okay. He raised his hand, but do tell me what your question is. Okay. Now, at the end of it, this thing is now this is my so-called hit list. I can sort it out. I won't go into too detail. This is something we cover more in our foundation course. I wish to teach you more about this, but this is something we will leave it to our foundation course. Okay. Now, what we want to do is looking at this list that we have here to pair it with my list from that I get here from my fundamental. In that way, we really have a full proof, looking from the fundamental way as well as the technical way. And this is how I select stocks for the client, because it's very important that you just don't want to choose this on par value, as I said before. Right, looking at here, like, don't just pick it up at par value. You still need to do investigation. And what we do for our clients' portfolio, we take one step further. We try to do company visit to ensure that the fundamental is agreeable, the volume spread analysis is agreeable, because we also want to look at the smart money if they are accumulating, as well as the third thing, doing the company visit. So once we have that, we're pretty much sure that this is a stock we want to hold and should do well. Any questions so far? Okay. Any questions so far? If you have, just type it in your questions and show it to me, okay? Right. Now, another thing of the investment criteria is, these are the things that the share price should be less than book value, preferably be less than net working value. Net cash holding is important. That's why we prefer company who don't have any long-term debt. PE is less than 10. A lot of the companies that we are looking at less than 10. However, for trading stocks and some of the like Guinness as well as JTI, which has really moved, are actually trading more than a PE of 19. Okay. William has a question here. Can I ask whether MIC or Perdana are good buy? Okay, we'll leave that later. Okay, William. Okay, towards the end there. Okay, those are your questions you have about whether it's a good buy or not. Okay. Now going forward, very simple for William. I would suggest him use this criteria that you have from Peter Kandil to go through with it and see, and you tell me whether it's a good buy or not. Okay, so I want you to do a bit of work. We as investors must do a bit of work. For this criteria, if you want to do a bit of work. If you don't want to do a bit of work, then just perhaps assign it to your remisier or your fund manager to help you to invest. Okay. Now another point is to be disciplined. I will talk about it in here. Very important is to follow a system. Now what I want to show you here, he talks about finding things that don't work in the stock market. One of the things that I find that don't really work in the stock market is actually listening to a lot of analyst report. That is why I in my day-to-day report, I always post. Okay, let me just see here. This one here, analyst call in here. Now, if you're simply just buying based on what analyst call is buying, every day they will tell you to buy something, and that's what I think don't work in the long run. That's personally what I think don't work in the long run. That's why I want to see what they are telling people to buy, and I try to avoid it as much as possible if they are in that list. So that's one of the reasons why I leave that, because I want to see what are the analysts telling me. Now, for example, if you see Amway here, it's asking you to sell. Now that's something maybe I'm looking forward to buy. Really, right? When they ask you to sell, I'm looking forward to buy. That's it is. That's the bottom line. It is. That's how simple it is, right? Okay. Right. That's the message I want to give off. Let's go back to here again, so you can read all about it. Okay. I hope, is Steve in yet? Let me see if Steve's in there. He has a question to ask me. Okay. Okay, never mind. Steve not in here. Perhaps you can watch the video later. Now, Steve asked me a question. He bought MSM some time back, and yesterday I did write about MSM, the stocks in here. Let me just go to the MSM stock. Okay, this was MSM. I'll blow it up to MSM. I told them, if you're premium subscriber, I did write about this being a test. Now this is a low volume test in here. We will talk about this a lot in our course. Low volume test, and now initially move when you see a world volume test, and after each successful test the market has to go higher. Now he said that, is it a good time to sell? I said, why? Because he bought it for 3 months. Now if you bought it 3 months, that's in June, he bought it in March, he has to sell it, right? So that's not my point. My point in here, now if you look at what I want to try, my message is, a lot of the good time, the stocks that did very well. Let me just go back to my latest best pick, 2011. Okay, 2011, my best stock pick. You can see a lot of the holding period are what? If you want to make the 50%, the 45%, the 41%, this is from the Friday closing bell available for the premium subscriber. That's why I encourage you all to think about becoming a premium subscriber, because like it or not, I like to do something back for the National Kidney Foundation, and one way to support it is when you're becoming a premium subscriber. Now, as you can see, if you bought a stock and you hold it for 3 months and it didn't go anywhere, but at least you're buying MSM, you do know you're getting correct dividend. But look at the holding period. What's my point here? My point here, you may have to hold it for typically about 6 to 9 months to have some sort of fair share, about 30% return. Right. Now, unless you're Raymond Chan, I think some of you may know, King would probably know, right? King, who is Raymond Chan, right? He's one of the big speculator in Harvard. He would make 30% in 3 days, right? For most of us, if you're looking to be a really good pure trader, that's the time period we're looking for. You got to hold longer than 3 months. Do